The issue here is maximising the tax deductions in an SMSF where there are pension phase members and you have expenses and contributions to the fund that allow you to increase the deductibility of the super fund's expenses. This can be actually difficult to do. It can be quite time consuming and as a result gets left off because unfortunately the rules are somewhat complex, but the tax savings can sometimes be well worth your while. So here's a simple example of a spreadsheet that is used to do this calculation. Here you have a superannuation fund with an income of $100,000, which is 50% exempt because 50% of the fund's assets are in pension phase. So the tax payable then is $7,500. Now if the super fund expenses are $15,000, you can allocate those under the section 25(5) rule where you can get 100% deduction, but also, for example, if you have a rollover. So let's say for this fund there was a non-concessional contribution of $150,000 and there was a inward rollover of $150,000. Then instead of the fund's assets being prorated 50-50, which is what the actuarial certificate is saying, the actual calculation is now 92.86 and 7.14, which is dramatically increasing the deductibility of the expenses. In addition to that, of the $15,000 in expenses, if it's say 3,000 of those accounting and there's 318 for the supervisory fee, then 11,682 is the remainder. Then it now allows you to claim a tax deduction for those expenses at a much higher ratio. In fact, of the 10,000, only 834 is non-deductible. Your tax has fallen by $1,000. It's about doing the calculation quickly, and tools like this can be pretty